All right, I think we are live. How you doing, everybody? So far I did not get any questions ahead of time. Angelina, if you can just kind of give us a quick, short background, because a lot of people have listened to your story from season 2, episode 1, and really loved it. It's become like the top stream for this particular platform. So I want to say thank you so much for coming back again to kind of share your story, and also tell us a little bit about what you're doing and how the taxes have really changed in the coming years.
Oh, no problem. Angelina King with 718 Tax and Financial Services. I actually started my company after losing employment in March of 2018. I stepped out. Literally, I was pushed. For those that were listening to the podcast about that wallet, the first go around. But yeah, and I just stepped out on faith and ran with it, and God showed up. Um, I've been asking for years, and here I am, 2022, still doing taxes and giving people a little bit of financial advice. But I'll give that to Anthony. I'll give him the floor that on that one. But um, definitely enjoy what I do. I'm a little tired today because New Year's, going to New Year, but you have these goals and resolutions. I don't do resolutions, but my goal was to kind of get some rest, and I haven't. So I've been running, running, running. But you can find me at 718 Tax Services on Instagram or 718taxservices.com. I do have a new ebook out that is kind of outlaying if you are wishing to move from your 9 to 5 into entrepreneurship, that there's some tax secrets out there, but they're really not a secret. It's just some things that you should know. And I'm always available. Reach out to me on Instagram or at my website. You can book an appointment for a free consultation for 15 minutes. So I just want to get you guys prepared for what's coming down the pipeline in 2022. The tax season is not open yet. However, the tax season, I'm guesstimating, because the IRS can't really give me an exact time yet, and they haven't announced it. It should be around July 31st of this year. So if your employer is still, if you haven't gotten your W-2, but by today, I don't think anyone's got their W-2 yet, but some of your mortgage statements, if you own a home, maybe coming through. But first things first, I just want to shout out about that wallet
Oh,
for all
thank
the
you.
amazing things that he's doing. There's a couple other people that he's interviewed, and I like to give shout outs to Giant Vending, Dale McLean, the whole nine, for the ones that I've listened to and will be listening to in the future. So I give kudos to all of you guys for keep doing what you're doing, because you're following your dream, and I'm learning just as much as everybody else from About That Wallet podcast. So before we get into it, if Anthony has any specific questions that he wants me to go over, we can. But I do want to mention something, because I know we're coming out of the pandemic or still in it, per se, that if you've lost a loved one over the course of the last 2 years and you haven't gotten a tax refund for that person, there is a form 1310 at the IRS website that you can actually download. Excuse me, that's my home phone going off. So apologize for that. But Form 1310 is actually you filling out that form for the refund that's due to your deceased family member. And that way, you can claim that fund. I know it's not a easy time for people, but I've had a few people reach out because, you know, they've passed and they wanted to know what to do. So, but that particular form, actually, you have to mail that in to the IRS. There's nothing that you can e-file. Um, and that kind of opens up a window to kind of address, do you have that will or that last will or testament. You can download that on LegalZoom or Rocket Lawyer, but Anthony is your good go-to person for that. If you need kind of directions here, I can definitely help with that, because we do have a credit restoration product that offers a will and trust. So reach out for me for that. But I'll let Anthony kind of give me some specific customers that you
Okay.
said. I hope I
No,
answered your question.
no, you did an awesome job, because that is one of the things a lot of people have lost their families due to the COVID. Not the vaccine, but due to the COVID virus. And this is really sad times and stuff like that that's happening. And a lot of people are scrounging around when it comes to taxes. So, I mean, a lot of people are probably just burying their loved ones, maybe this year. And even though they lost them by December 31st, when is the latest that they can actually file their taxes for a lost one?
Well, you can actually do that now by April 15th. If you have all the paperwork together. However, if you're in a situation where that person has passed away on December 31st, please, please, please monitor that deadline of April 15th and file an extension. Because when you do file that return for that lost loved one, we're gonna have to put deceased on that return for that person. Um, Filing that extension gives you that extra 6 months. So gauge it around October 15th of 2022 as your final deadline, but you're going to have to file extension just for there's no special treatment, seriously, because it's that last tax return for that individual for the year.
That makes sense.
Yeah.
So with the taxes coming around, I noticed that there was something that was interesting to me, and I was taking like a small tax return class, and they were saying is that for people who are married filing separately, they cannot contribute to their Roth IRA. Why is that? Do you know why that's the case?
Well, the benefit is married filing jointly because the deduction is a lot higher.
Mm-hmm.
It's 24. I believe the deduction amount for 2021 is raised to $2,100 because you're acting like a single person.
Mm-hmm.
Don't act like a single person. If you're married, file mail and filing jointly, because your benefit, it's an advantage to you to do married filing. There goes my cat. So, so yeah, it's to your advantage to file together. Now, there are situations where married filing separately is advantageous to that person because child support issues, or you owe the government an X amount of, you have some other known like federal student loan debt that you owe, and you don't want your spouse to be, in the mix of that. So when you file mail filing jointly, there's not a way around it, but you can file an injured spouse form. So what the IRS will look at that form and say, look, a portion of this tax return is going to the injured spouse in full. The other portion of that tax return is going to satisfy that obligation, whether it's a student loan or child support. A lot of those things have been phased out because now they say we're coming out of the pandemic. So it's still early to tell. We don't know what the administration is going to do to say, look, we're going to give you another year of relief. We don't know. But as of right now, that's all been wiped away. So the advantage is to file married filing jointly. It's just not it's not to penalize.
It's not fair. It feels like it's not.
It's
fair,
not to
but-
penalize. If you're married, you're wanting work together, right? If
Yeah, but if it's my money, I should be able to keep my money.
I understand, but that's a whole nother can of worms. That's a conversation for you and your spouse to kind of decipher. As a
Okay,
tax professional, I can only tell you what the law is telling us. So
that makes sense.
I'm not going to get in the middle of that. So.
Okay. Keep your hands off.
Yeah, hands are off.
Sure. So I noticed that a lot of people say if you're trying to max out your 401k this year, and for some reason you missed it by like a paycheck, or by like one contribution, like $750. You just missed it. Is there a way that people can still contribute to their 401k or their TSP if they are in the government?
Now, see, that's something that I need to confirm for you, Anthony. However, if you want to make a distribution, like you said, you had like a Roth or a traditional IRA outside of your employer, you have until April 15th to make that contribution. As far as from the federal level, I am not sure.
Okay.
I am not sure. I don't know if the rules are the same or different. So I would have to get back to you on that one. I really
All right.
Yeah.
Yeah,
So
because I was just wondering with that, because it's like,
yeah.
so since you mentioned that if we could take it outside of what our employer is having, is it okay that we have our own traditional IRA outside of what our employer is having just for these particular purposes? Say if we were trying to max, but we couldn't get it with our employer, so we just went on and contributed to our own personal traditional IRA.
Yes, you can. And think about it this way. And we said this on our first, when we interviewed, back in June, I believe it was, you never stop making money. You never retire from making money. So if you have that separate IRA account and you want to max that out before, and say this is for 2021, by all means do it. If you have the funds to do it, max it out and put into yourself traditional IRA or self-directed brokerage account. You can do even some type of retirement vehicle. You have until April 15th, 2020 to do that when you file your taxes, or even before. If you have that money today, you open that account tonight and you fund it by Friday, hey, you're covered for 2021 because you have earmarked those funds for the 2021 tax year.
That makes sense.
Mm-hmm.
So, is there anything that's new from the standard deductions? Did they raise up for 2021 that we should be aware of?
Yes, for single, it's $12,550. Same thing for married filing separately, the same deduction. Married filing jointly, I just have to stress because I don't know what's going on in people's households,
Right.
but you see things that, I was shocked that I saw someone getting divorced. I was like, oh my God, there's a couple of whatever, but
Yeah.
whatever. But from a tax perspective, married filing jointly for 2021, they raised that to 25,100. Now, and since the new year has started, due to inflation, they raise it again. So, but that won't be applicable until you file your 2022 taxes in 2023. But yeah, and then head of household for 2021 is $18,800. So the deduction amounts went up a bit, maybe $100 or $200 from the prior tax year, and I think even what's new, they updated the earned income credit. Instead of being 25, if you're 19 and you were working doing last year, the last tax year, you can qualify for the earned income credit for a certain income level. So
Hmm.
that was something that I found interesting, that they lowered the age rather from 25 to 19. So there's a lot of 19-year-olds, I guess, working. But keep in mind, when it comes to income, because I kind of want to touch on this to make it very, and I know people have seen things on social media. If you paid anybody by or received any funds by Cash App,
Mhm.
Venmo, PayPal, Etsy, Shopify, expect a 1099-K from these organizations, because anything over $600, you have to report that either as income or personal or business expenses. However, that's why even crypto and Bitcoin, that little box on the face of the 1040, have you exchanged any type of virtual currency. Be truthful, because a lot of these cryptocurrency accounts like Coinstar and the big names that, I'm not too familiar with all of the names, but they're supposed to give you a 1099B, so
Mm.
look for that either via email or in your mail, because the IRS, all this money going out, they're going to get it back some kind of way. And that's all I'm going to say, because I know this is
You know what? I mean, that's one reason why I was asking about the Roth earlier, was because I have a feeling they're going to ask for it, but how they're going to ask for it is what I'm worried about.
Well, with your Roth, if you contribute to your Roth you're going to get some type of form for that financial institution that you're going to make that contribution to. So, actually, after the tax, you might not receive that particular. I think it's a form 5489. I might have that totally wrong, but I'll look that up for you later. But you will get that like after. But you do have until April 15th to make that contribution. And be honest about it. I mean, it's going to be stamped some type of way how you made that contribution, whether it's before April 15th or after. If it's after, it's not going to count for the 2021 tax year. It's going to count in 2022.
That makes sense.
Yeah.
Now, I recently was looking into HBCU endowments,
Okay.
because that is still being active until, I believe, 2023. Is there any added benefit besides local state taxes?
It's just local state tax.
Okay.
I'll research that for you, Anthony, just to, you know, dot the I's and cross the T's and let you know. But I'm not too familiar with that, to be honest with you. But as far as the state taxes are concerned, it's just for the state. Yeah.
Okay. Yeah, because I was looking at that. I think it was up to 25% back, and I was like, well, I mean, I got but you have to do it within a year. I don't think you can add it on until like how everything else is until April 15th. You have to do
Right.
it within that year frame, that calendar year, which I
Right.
thought was pretty interesting. So I already missed that boat. I was trying to do it this year, but I was like, I've been procrastinating.
Well, think about it this one: on the federal level, though, you're married filing jointly, hopefully.
Mhm. Separate,
Okay.
actually.
Okay.
Yep.
Well, your above the line charitable contributions. See, if you were married filing jointly, you could
Mm.
claim $600.
Gotcha.
But as a single person or married filing separately person, it's only $300. So you could have captured it that way. Or if your itemized deductions exceeded your standard deduction, we would take the higher of the two amounts. So the standard deduction for married filing separately is $12,550. Well, if you had $13,550, we would have taken the higher number, because it's just more advantageous for you. It's a more of an advantage for you. Excuse me. And it's just certain things. But it has to be from um, a classified charitable contribution, organization. It can't be said, well, I gave Pookie and them $600 or $300.
Right.
I'm gonna write that on my taxes. Well, Pookie, what is your social security number or EIN number?
Right.
Pookie don't have it. So that statement, even those church contributions, if you make your tithes and offerings, if those exceeded that minimum contribution or your deduction amount, we always we maximize that deduction for you as much as we can to get you a few extra dollars, because you just never know.
So if I put up there to say, hey, donate to the About That Wallet podcast, and people give me like $300, now the person that's donated, even though I'm not a 503B filed as that as an entity, can somebody actually put that on their taxes as they gave this to me?
But see, you have to be a 501(c).
501(c). Okay.
If They said it was a gift, a cash gift.
Hmm.
Because on certain tax programs, you can put it as a lump sum, and
Hmm.
you don't have to report who that person is. I have to really tread carefully because I know I'm live. But a lot of tax programs ask for the organization, their EIN number, so they can, definitely report. Say if I give you $300, say, look, I'm investing in you. This is
Hmm.
my charitable contribution to you, but it goes as a gift because you're not a 501(c).
That makes sense.
Yeah. So, but I can give you a gift,
Hmm.
as long as it doesn't exceed $15,000 because we don't want to institute the gift tax. That's a whole nother conversation.
That's what I was wondering. Yeah,
Yeah, that's a whole nother conversation.
because recently I received some money from for Christmas, just saying as a thank you, and some of it was actually to help go towards my business. So I was wondering, do that person actually have to file that to say, hey, I gave this as a gift, or will I have to make sure I show it that, hey, I received the gift payment as a business?
Well, if we want to do it the correct way,
Okay. Yes, the correct way. Yes, yes.
yes, you can say that this goes to your owner's equity, someone invested in your company. But
Mhm.
until you're that nonprofit and you start doing a charitable contribution tax return, because on those, which is the Form 990, and I don't want to confuse people out here, but that Form 990, if you're that nonprofit, but you had earnings less than 50,000, you don't really have to report it. All you have to do is pretty much do a 990. It's like a postcard to let the IRS know I'm filing again this year. I still have my nonprofit. I made less than 50,000 this year. I'm reporting it. So any contributions that you have to be responsible to account for that accordingly. Um, Now, when you make over $50,000 in nonprofit income, that sounds funny to me when I say it like that, but that's considered like a contribution to your organization.
Hmm.
Um, that's when it gets a little bit more involved with that tax return. But if someone gave you that as a gift for Christmas to, build your company, just put it in as other income that you receive for your business. Um,
Okay.
because you have your gross receipts, you have, I don't think you have any cost of goods sold, but if you're selling product, you may have that for your inventory, but other income you receive. Now, if that person was your mother or grandmother and gave you that money, she can say on her tax return, well, I gave a gift, to my nephew or to my grandson or to my son, an X amount of dollars. If it doesn't go over, the limit, that she should be okay.
Okay, because I was wondering about that.
But I'll
As
research
they go.
definitely for you, and I'll get back with you.
Oh yeah, I know you get back. I want to have you do too much homework.
Oh,
It's okay.
no, no, I love what I do. So,
Nice.
yeah, because I had a call actually before we got on this live that
Hmm.
one of my clients, she hasn't announced it yet, but I should say he or she,
Hmm.
that they won a vehicle and they were
Oh,
freaking out on what they should do. So, yeah, I'll get back with you along with that person. But
yeah, because a lot of speaking of vehicles, because a lot of people actually started their own businesses over the pandemic and actually coming through for this year, just last year. So for the new people that are starting out, what is it should they bring to the table when they start to file their taxes this year?
um, I'll touch on W-2 and I'll touch on small business.
Okay.
W-2, just make sure with your employer, with your HR department, your social security number is correct, first and foremost, because if it's not, they can do a corrected W-2 for you and get that to you on time. Also, make sure your address didn't change because I know a lot of people got evicted because that moratorium, because of the law with the CARES Act and American Rescue Plan, they instituted, evictions to start back up. Just make sure your change of address form is done with the IRS. I don't have the form number, but if you just Google change of address with IRS, there's a form there that you can submit ahead of time. Or when you do your taxes, just make sure your correct address is your new address is on there. Um, a couple other things that W-2 employees can do is the IRS is kind of pushing for you to set up your online account so you can view your tax situation, just to make sure you don't have any tax liabilities out there. So you can also renew that online at the IRS website. Um, Make sure that you are not filing exempt, because you're going to be like, why do I owe taxes?
Right.
Right now it's a little too late, but fix it. Fix it, for 2022, because if you said you didn't, have any taxes deducted out of your paycheck, you're gonna be a little surprised. Even with unemployment, what they did in 2020, they relieved 10,200, but that's going back, because if you were not working in 2021 and you didn't have taxes taken out of that, your unemployment, you likely will owe tax, because they only reprieved in 2020 10,200. That was the threshold. So if you were unemployed for the entire 21, just be prepared, to either make a payment plan or file an extension until you can get a job to kind of figure out what you owe to the government so you can make a plan with them. See. Um, Let me talk to some of our older taxpayers, like, because I have an older client who's about 94.
Oh wow. Okay.
Yes, awesome, awesome guy. I mean, but he was a little concerned about lowering his tax liability because all his income that he gets, Social Security and retirement from the military, no taxes are taken out. So he knows he's going to be owing. So, excuse me,
It's
this is the
okay.
beginning of the year. It's okay to go to your retirement where you're getting that, your distribution each month, to say take taxes out of it, because you want to lower your tax liability, because more than likely you're not going to be in a position to say I'm going to make estimated tax payments for 4 quarters in 2022. But it's okay to have them take out, some taxes. They will guide you. You can fill out, they'll probably ask you for a W-4 form to fill out, and they have a retirement W-4, on your retirement website. Because I had to help, an older client, not only him but another lady, because they were like kind of scared because they're still dealing with, the effects of the pandemic. Family members being sick, and family members being, deceased and whatnot, and they really can't afford, because they're on fixed incomes. So, and if you have any viewers that are turning 72 this year, um, there is a, required, minimum distribution that they have to take, because they're going to be in up the creek with their retirement. If they have like an IRA or something like that,
Yeah.
um, they're going to be penalized for not taking that money. So now is the time. If they're 72, they turn 72 at the end of, December, um, into January, kind of schedule that. Well, I know in January, if this year is the year that I turn 72, put it on your calendar somewhere, reminder on your phone that you need to start taking distributions, because you're going to get hit pretty hard. Um, I already told you about the charitable contributions for single and, married. So that's kind of something. Loan forgiveness. With the loan forgiveness, a lot of student loans have been forgiven, for certain, uh, work, I guess, industries. like public service, you being a teacher and whatnot, those are not going to be reported in your income. I'm a little surprised,
That's interesting.
but I'm gonna leave that as that. But I know my opinion about that. We talked about that, so
Yep. Yep.
I know I'm live, so I'm just
Yeah.
gonna take it.
So, because we know that a lot of people have are just sitting on cash right now, and a lot of people actually have spent their money buying real estate. I recently had somebody. I probably won't post this episode until I'll say at least later on this month. But it was about using the Schedule E for their rentals. Is there anything that a person should understand? If you can just, matter of fact, let's take it back a little bit. What is the Schedule E for somebody that's actually renting property for the first time?
Well, one, for that Schedule E, I would say I hope it's not in your name. If it is, that's fine. It's going to contribute to your your gross income. But I really highly suggest in your next year of doing any rental transactions, because any rent payments that you take from your tenant is considered income. Keep that in mind. So you have your regular salary, and then you're collecting rent payments, and if it's in your name, it's not going to your business.
It's count as income.
It's counting as income. But let me pull up a Schedule E so we can actually go through, because I need to kind of look, because one thing, you're going to need the property name.
Okay.
When you
I believe you can actually share your screen if you want. Or you
oh
want me to do it? Yeah.
oh okay. So let me just pull up the you know what, I was going to change the batteries in my mouse, so I'm going to just use my pad here.
Okay.
And let me pull up a Schedule E.
We do have a question that came in while you pulling it up.
Sure.
I'm gonna pull it up right here. Come from Azim. How do we capitalize on our tax deductions the same way the 1% do today? Seems the middle and lower class pays more than the 1%.
My thing is start a business. Because everything with your business, just about everything is the tax deductible. So
yeah, we talked about that for 2 hours.
Yes, we did. So if he wants to schedule a free consultation, please reach out to me and we can talk about it further. All right, let me see if I can share my screen. All right, share screen. I love this platform, but I'm just trying to get myself acclimated real quick.
That's good. Yeah, so hopefully, Azim, we actually answered your question. Pretty much, you need to start a business.
Yeah, pretty much. Because if you're a W-2 worker, there's a lot of advantages for small business owners. And with the Job Cuts Tax Job Act that came out, can you see my screen?
Did you hit share?
I guess that's the problem. I have two screens because I have dual screens and I'm trying to figure out which one.
Okay.
So give me a second.
It's the beauty of doing this live.
Yeah, we're live.
Okay, now I see it. I can actually add the stream.
Okay, awesome.
Cool. There we go.
So we'll just go through this real quick.
So we can do it that way.
Yeah, with this schedule, I'm going to move this over to my other screen so I can still see you.
Okay.
And then look at the form as well.
Like you might have to zoom in just a lot.
Yeah. Okay. So there's a couple sections in here. So we'll just go over part one. So this is your supplemental income and loss schedule for the Schedule E. Can you see that okay?
Yes, a lot better now.
Okay, a lot better. Okay, so your part one is your income or loss from the rental, real estate and royalties. So if you're renting out the property and you have a property manager, okay, that property manager, and if you don't, you have to make sure that you take account for all the rents that you took in for the year. If you bought that property in June of last year, it's from June to the end of the year. So you need to put in, you just answer the questions as best as you can. And a lot of tax programs do walk you through, on how to answer these questions. But since we have it pulled up, it's like, did you make any payments that will require you to file a 1099? Say, for instance, for your rental property, you hired a contractor, okay, and you paid him more than $600 to do some work. So
Mhm.
in this case, yes, you did. You hired someone that will require to file that 1099. So you will answer yes to that question. You're going to have to put the physical address of that property for each one that you own, um, in part 1A. So you see the physical address here. Um, if you know the fair rental days, you would put that in there. If you don't, just see the instructions that goes with the Schedule E. Even if you have a little bit of issue with that, feel free to reach out to me as well, because I can help you with that. Now, the type of property you need to put, whether it's even if it's a Airbnb, that will be classified as a vacation short-term rental. Okay. But
Really?
if it's, yeah, if it's a single family home, if you did that for the purposes of, a Airbnb,
Hmm.
it would be like a short term, because they're only in there, what, if they're scheduling for, oh, I'm gonna want to stay at Anthony's for a week. Okay.
Right.
That will be that. Or if it's a single family residence that you bought and you actually have a tenant with a lease, that lease is a year lease. Okay. That will be classified as single family residence as well as multifamily. So if you had a duplex, even if you had land, you know, you just want to make sure the property type is consistent throughout each tax year. So once you first establish that at the beginning of, you start doing your rentals, make sure you keep suit unless it changes or you sell some property or whatnot. And 3A, um, is where you're going to put your rents that you receive for the property. B would be for if you have three properties. We'll just use that an example. Your first property will be in column A, your second will be B, and then your third will be in column C. Royalties is not really something, it's more rents collected. So royalties may be something like, say, for instance, you were a rap star and you got a check for royalties that you receive for a lot of your albums and whatnot. It's considered property, and that'll be like, classified as a type of property as eight as other, and then you describe what it is.
So that means, like, if for my business,
Mm-hmm.
for any reason that since I actually have a trademark for my name, and I were to license my name out, that means I can actually fill out a Schedule E for it.
Mhm. Yes, you can, especially if you're receiving funds for that. I'm in the same situation with as you.
Oh, nice. Awesome.
Because with the selling of the digital products and whatnot. So
Oh, so your digital assets can go on this too?
yes, yes, they can.
Okay.
But I will make a post that will go more in depth in this and kind of
Okay.
summarize a lot of these things. So be sure to follow me at 718 Tax Services
Hey.
for that. And so if you have expenses for that property, we're talking real estate. So any advertising for you to get, the word out, well, I have this house for rent, and you paid, for a Facebook ad, or you paid old school way in a newspaper, or you hired an agency to advertise that you have a rental property. All of those costs will go in, for that, for on line 5. Any auto, like you going back and forth to the property to check on it, or meeting a maintenance man or something like that, or um, if what else would it be? If your property was out of state and you travel to that property, any auto and travel expenses will go in six. Okay.
Nice.
Cleaning and maintenance of the upkeep of the property. That's pretty much self-explanatory. Any commissions that you paid your property manager for helping you rent the property out will go in 8. Insurance, you're gonna have to have insurance on the home, so that'll go in 9. Legal and professional fees. Say for instance, you brought the tax return, information for me to do it. My professional fee will go there. Even if you had an attorney draft up a lease for you. But if you did your lease on your own, do either LegalZoom or Rocket Lawyer, that fee will go there. Management fees for managing the property, self-explanatory. Now, on the property that you own or it's in your business name, your interest paid to the bank for any interest that you receive for that will go there. You cannot put that on your itemized and here too. It has to be one or the other. So that's the only downside. Some people do that as a portion, like, oh, okay. But that's another conversation, especially if you had like a partnership with someone and you own real estate. That's a different return altogether. So, any other interest that you accumulated from the property, repairs, supplies, taxes that you
Everything
had to
else.
pay,
Yeah.
real estate taxes for the property goes there, utilities. Like say for instance, you had the lease end on the 31st, but you have somebody moving in at the end of January. Any utility costs that you had accumulated during that time to show the property and make sure that the contractors can go in there and do what they need to do to clean it up or make improvements, that utility cost goes there. Depreciation of the property goes there. We won't get bogged down in that, but again, if people have questions about that, please reach out to me. And then you just total up your expenses. Um, and then this Schedule E was going to actually flow to the correct schedules. Like say, for instance, we did on in our tax software. So it'll definitely say um, you wouldn't have a gain or a loss because you didn't sell the property during the tax year. But if you did, there's a different schedule. So we would have to do that as well. So any other questions? Comments?
Didn't see any other questions coming in from YouTube. I know we coming up a little bit on time here. I'm gonna remove this your
So I'm
second
gonna stop.
screen.
I'm gonna stop share. Okay.
So one of the things that a lot of people are just regular W-2 workers. I know we talked about this before at length. What is the kind of the breakdown since the year has already ended? We into a new year. How does somebody what should somebody do to kind of close out the year, and also what should somebody be doing now as a W-2 worker to get prepared for the end of this year?
Well, exactly. Make sure when you get that W-2, compare if you did keep your check stubs, make sure that all your deductions are coming out accordingly, that you are satisfied with. And if you have problems, please reach out to your HR department because if there was a mistake, and especially if you got reimbursed some money and you feel like you took a travel and you never got reimbursed, bring that up because they will have to do a corrected W-2 for you. Make sure that your contributions that you made, even if you got bonus money um, for the end of the year, make sure that that's accounted for correctly. As I said before, make sure that your name and social security number looks correct and your address because it could delay, processing of your tax return um, for those 9 to 5. And if you want to open up that secondary IRA account, you do have until the end of April, middle of April rather, to get the contributions in. But those are just the basics. because a lot of this should have been done before the tax year ended. Because I mean,
Right.
it's a
It's
little too
already
late.
anyone.
It's just a little too late right now. But
Yeah.
um,
But just going forward, it's kind of help us, all of us as W-2 workers, just to kind of plan our lives accordingly. Because I know right now, most of us, we're already in our new pay period. So to try to max out at, I think it's what, 20,500 to max out your retirement accounts for this year, which I think it only went up by like $1,000. So
yeah, it only went up because it was from, yeah, it only went
19,
up. Mm-hmm.
yeah. So
Yeah.
instead of I think before in the past it was $750. So now it's $788 paycheck to contribute. Um, in my calculation, it's like 788.49 something something. So if you want to be exact, it's 788.50, just a round up. Um, so with those contributions, that's one thing, and I think we did dive into length, which was talking about your W-2, mean modifying your W-4s to kind of make sure you get all your contributions that way, not leaving money on the table. Um, is there anything else that we should be doing as far as like budgeting, planning for taxes, or anything that's new that you can think of, or that has been not think of, but that's in the law that we should be aware of?
Well, one thing to be aware of, you are going to get a letter for that last stimulus if your income didn't go over a certain amount. The last stimulus came around, well, it was different for other people. The third stimulus, because the first and second were before the end of 2020. Okay. So you're going to get a letter, which is a letter 6475 from the IRS. They will mail you that. You W-2 workers that do have kids that receive the advanced child tax credit, say that fast 3 times. You also are going to get a letter to know how much you receive in 2021. Now, you may have not received the full amount because a lot of you have opted out, which is a good thing actually, because you'll get that advance, that child tax credit on your 2021 tax return. So look out for letter. I think I wrote it down. So it's letter 6419. It will list out the amount that you receive for that advanced child tax credit. Um, so you'll be able to know how much you actually received, and it's not a surprise. If you disagree with what you received from the IRS according to your records, there should be a phone number on there that you can reach out to them to let them know. And they may ask for documentation, so be prepared for that. Um, Make sure you do take advantage of the charitable contribution this year because it's above the line transaction. Also, Roth conversions. I don't want to get too bogged down into that, but you can do some conversions before um, April 15th to get that done. Don't quote me on that, but I'm going to check that date to do that. Now, for those W-2 workers that did not receive a stimulus check, recovery rebate credit in 2020, if you did not file your tax return, that's probably one of the reasons why you didn't get it. You can still get it. You can get it through your paid preparer electronically because we can actually file your return electronically, or you can go to a volunteer tax preparer and they can process that for you. But if you decide to do it yourself, you're going to have to mail it in. And if you decide to mail it in, please certified mail. Anytime you contact the IRS via mail, certify it so you have that slip so you know when it was received. Just because they received it hasn't mean that it's processed.
So I always notice when you get that certified mail, are you supposed to get like a email back, or just kind of save it for your own records, just to say, hey, I actually sent this? And when you're supposed to get like a notification that somebody actually signed it?
Save it for your records because that's between you and the post office. That's
Gotcha.
not between you, the post office, and the IRS.
Mm.
Because I challenged a lady on that, and I was like, someone had to sign for it. I mean, it said on my tracking, but see, that's between you and I won't go back to that because
Another story.
that's a whole nother story. But yeah, save that record for you in the post office. You can argue with the postmaster all the time, but anytime that you like, but be careful with that too, because that could be a federal offense. So,
Oh,
yeah. So
okay.
be kind. But yeah, that they gave you that tracking number on the receipt for a reason. But you pretty much stay up to date with that. But certify mail, anytime you mail anything to the IRS, certify mail it, because it could be sitting on someone's desk. Because I found out something was sitting there since June of last year for one of
Wow.
my clients, and if I didn't call, they wouldn't have pushed it along. So yeah, so the little frustrations there. But for business owners, I know you asked me that question earlier. What can they do if they started that business? Just know that any of your startup costs that you did have in 2021, you can deduct. I believe they didn't change it. I do have to go back to my refresher notes, but up to $5,000 in expenses. So if you bought equipment, I know a lot of people have seen on social media that you can deduct cars and whatnot. Well, there's a special section in the IRS code called Section 179. I encourage everybody to kind of, if you're interested about that. I know certain dealerships have that on their website, and that's when you can write off 100% of that vehicle. But there's a way that you do that strategically through tax, and I wouldn't go overboard with that. Just do your research. If you have any questions about the Section 179, feel free to reach out, or I'll make a post on it, and then you can see, some basic information. Um,
Awesome.
yeah.
All right. I know we cutting it close on time, but I also want to say thank you so much for coming back because,
Oh,
I know we talked at length about the last one. So I definitely got to chop that up because it's been a while, but it's been so popular. Because a lot of the stuff that we're talking about here, for those of you who are watching now and actually new to the show, um, Angela and we dove directly into W-4s, how to modify W-4s, what you can do as a W-2 employee. So this particular uh, recording or live is really for those of you who are just want to catch up right quick, get ready for your tax season, because tax season is really now. You should already have all your receipts, already have everything that you've been through, what gifts that you're giving to people, what things that you've already donated to the what they call that lovely place, Goodwill, and so forth. And those of you who have started businesses, obviously, you gotta save your taxes. We also went over the Schedule E already today. For those of you who are renting properties, who are doing short-term rentals, we also, what else? We talked about a lot today. Uh, People who just had babies. We talked about death in the family, where you need to form 1310 just to make sure that you can actually file taxes for a lost one. But please, if you guys are just watching this now, I would definitely say rewind it. Once this goes fully, I'll post it up fully on YouTube probably later today. Um, but those of you uh, who need additional assistance, please reach out to Angela. She's not always available. Her team is available, and to further assist you for your consultation. Um, but again, I want to say thank you so much, Angela, for taking your time out today to talk with everybody at length about how to maximize their taxes. Once again, I mean, I'm not sure if you have to be like an annual guest on the
hey,
show.
let's do it. Let's do it.
Let's do it. All
Yeah, we
right.
said it. We said it what on January 3rd, 2020. Yeah, let's do it.
Yeah.
Why not?
All
Why not?
right. Let's go.
And then we'll do like a mid-year check-in as well. We can do that too.
Okay.
Yeah,
I'll definitely like you in for the mid year. Say like what, July or June?
you pick. You just let me
All
know.
right. All right. Thank you for being flexible.
Oh yeah, most definitely. And go to the IRS.gov website because they do have. I posted on my page a couple times in December, and again, I believe today about how to get ready for taxes and what's new to consider. Now, for the business owners, I do want to say this last thing, Anthony, if you
Mhm.
don't mind, the mileage rate has for 2022 has gone back up, but for 2021, it was about 56 cents a mile. So if you're doing mileage, driving here and there to, check on
Much.
clients or lunch, 2021, your meals are food or beverage 100% deductible.
Yeah,
So
I got my receipts right. Yeah, I was actually just pulling one up from the other day. So
yes,
yeah, I got and right on the back of it, on like why was I there? Because I
yeah.
thought they didn't look at receipts unless they over $100. So or they don't really
It's
care.
always good to keep them because I mean, from my perspective,
Mhm.
but if you are using like a program like QuickBooks or what I kind of recommend my clients to use is Hurdler. Hurdler actually will scrub your bank account if you link your bank account to this and pull the expenses for you. It makes our lives as tax professionals very, very easy to put your books together for taxes for the small business owner, sole proprietor, single member LLC. Because if you just bring me a box of receipts, I'm gonna give it right back to you.
Oh, okay. Yeah, I was
Yeah,
wondering that.
yeah. So Hurdler is very inexpensive if you're not a QuickBooks person. And I just have been pushing that over the summer to my clients to say, look, let's do it. My brother Dale, he is phenomenal. He's been using it and it's made my life much easier. So when we sit down to recategorize some of his expenses, because we did that just before the year end, we're going to sit down again just to make sure we just, pick up the transactions from where we stopped to the end of the year, which is not going to take long, 5-10 minutes, 5-10 minutes, seriously. um, but if you're a spreadsheet person, for spreadsheets are great.
Okay, so I don't need to take a picture of my receipts, even though I have it on a spreadsheet, and I just have them available.
Do you have them taped to a piece of paper?
Yeah, I can tape to a piece of paper.
Well, yeah, and stick it in a file. Keep those for at least 3 years.
Okay, it's good
Yeah.
to know.
Yeah, hurdler.com. I mean, because if you choose me as your accountant, Hurdler Pro is not too much, more in cost, and that is tax deductible for your business. So
Oh,
Hurdler actually, if you sign up for Hurdler Pro, you can assign me as your tax accountant, and I can go in there and run reports because what I'm really looking at for us to do your taxes, their Schedule C to put your expenses on there, and it'll show you your Schedule C in Hurdler. So, but if there are expenses that you can't figure out what needs to be categorized, we can sit down and talk about it. But it's only like $16 a month. I mean,
well, that ain't bad. That's a lot cheaper
not at all. Not at
than
all.
everything else.
Yeah. And
So, is it when somebody go to add you if they get the pro? Is it tax services or they just look you up as your name?
actually, you let me know and I can send you an invitation. And then that invitation from there, you give me the approval to go in to your dashboard.
Okay. Do you got a referral code or anything?
I do. Do I have it handy?
Because I want to
No.
make sure that we can
Yeah.
post this up right quick for everybody,
Yeah.
and
Let
I'll
me.
make sure I put it in the show notes.
Yeah, I'm gonna have to send you offline. Um,
Okay. I know
yeah,
we're on time right now, so
it's okay. I have a few minutes, but because we discussed that before, but
yeah.
definitely at 6:10 I gotta go.
Okay.
But let me see if I can get my referral code, and then I'll put it in the chat for you.
Okay. Perfect. Um, so everybody, I mean, this is really good information for those of you who are business owners because um, this is, I mean, one of the things, the hardest thing is tracking your day-to-day expenses and actually trying to figure out, well, when was the last time I went out to eat? or that I actually drive to this location. Because one of the things is that I noticed some people do, they track every mileage, but then they should only track the mileage that is used for the business if they only use their car for personal versus business. So they only can deduct that percentage, not the whole thing. Correct.
Correct.
Man, awesome. Hey, you taught me a lot.
Yeah, and you listen. I'm just so proud of you.
Uh,
Um, Actually, looks like I have to put in all your information in order for me to send you the link. So,
gotcha.
uh, let's see. It's Anthony at aboutthatwallet.com.
Yes. And then I'll make sure I put it up in the show notes.
Okay.
All right. Well, um, Angelina, I just want to say thank you again. Because
You're welcome.
I don't want to keep you too much longer. It seemed like we haven't had any other questions. We did get a comment.
Was it a good comment?
Yeah, it was a good comment. It's good information. A great idea for mid-year tax review.
Yes. Yes, yes, yes. All right. So I'm going to send this over to you.
And
And
thank you, Devana, for the comment.
let's see. I'm going to invite you. Let's see. Resend invite. Now you let me know if you got that invite. Because that way you'll be able to put that in the show notes. Because the way Hurler works, we want to protect everybody's information. So, but I have access on my end to send out, invitations to specific individuals. It's not like I have a code.
Okay. I
Yeah,
don't know why they lock things down that way. Just give your
I
flat
don't
code.
know.
Yeah.
I know, right? Because I know I'm on website. If you're looking for payroll solutions, Gusto is a good platform. It's very inexpensive, especially if you're starting out, in business and you have a few employees that you want to pay. Gusto charges you maybe $6 per transaction,
Oh, that ain't
and
bad.
then your employees can self board, onboard themselves, basically putting in their check if you're going to pay them direct deposit, which I highly recommend. Stop that Cash App and stuff. Please, please, please stop. Stop.
I mean, it's so convenient.
It is, but at the same time, you're going to get a 1099 10K.
Okay.
It's, I'm sorry.
All
It,
right.
it's the tax person out of of me.
Well, can we do it this way? Um, we can receive it Cash App and then send it to another bank account. So each business, like for your business, I heard this as a small pro tip, which to have 3 bank accounts, which is one for the income, one for the outgo, and then another one for taxes, just to save for taxes.
Yes,
Uh,
it's a good
yeah,
strategy.
yeah.
It is.
All right,
I guess
simple.
I'm old school in that way. I'm just like, yeah, oh, you need $5. Yeah, I'll Cash App you, but to run your business through that, no.
Gotcha.
I cringe because it's going to create more problems with you with the IRS.
That makes sense.
And we want to kind of follow the rules to the law.
Mhm.
I know we're live, so I'm just
Right.
going to.
We can take the rest of it off.
But again, shout out to Giants Vending and everybody who's watching. Thank you for having me, Anthony. But um, yeah, if you don't get that link and to put in the show notes later, I'll just contact Hurdler and see what they can do for me.
Okay.
Because
Perfect.
their customer service is awesome. It's better than a lot of these other platforms. It's like a live person answers.
Nice.
Yes.
That's good.
Yeah.
All right. So I'm gonna end it there because it was all on a good note. And thank you, Carla, for saying thank you for the information. Um, I'll be on their podcast, Highway 54 on Sundays, starting on the 8th of
Oh,
January.
really?
Yeah, they
Okay.
do it every Sunday, so it's pretty cool.
Awesome.
Yeah.
Congrats on that.
All right. Well, we're gonna end this here, and thank you so much again. It's this probably won't even go inside the podcast episode. It'll just be strictly on YouTube and Facebook. So keep it there.
Awesome. And I'll make sure I'll post it to my page too. So
Awesome. Thank you.
Yeah, and I'll give you all the credit.
Thank you. Thank you. Thank you.
All right. Happy New Year to everyone. And Anthony, keep doing what you're doing.
All right, will
And
do.
if there was no clarity on some things, just reach out to me, and I definitely will answer questions.
All right. See ya. See ya, everybody. Y'all be safe. I'm out. Peace.
Bye.